Hey Jason, what's going on, man?
Oh, it's going great. How are you?
Doing well. So glad we're able to collaborate here. So
hmm
for the audience today, we'll be talking about the overall stock market, what recommendations Jason has for all of us, right? And why he thinks these recommendations would be a valuable insight for us to consider as investors or new investors or even existing investors, why it's so important to follow this type of strategy to develop an effective and rational investment strategy, and then just go about just going through different sectors and just giving the audience insight on what we think is going on with each sector. So I'll just kick it off to you, Jason, just giving you the opportunity to share with the audience your intro, and yeah, we'll get it started.
Sure. So, if there's anything that 2022 proved, it showed who had the best investment strategies and who didn't. There's been between 2020 and 2021, there was a lot of fake rich people out there, and we had a lot of YouTube content about stocks at the time. And if we've noticed over the last year or so, a lot of those have dropped off. And I think a lot of that shows who the true investors were and who was just riding along with the bandwagon at the time because everyone's making money. You really could not go wrong making money over the prior to 2022 during the height of COVID. Um, but
You had the meme stocks and everything going on at that time, right? Everything was just like skyrocketing.
yep. But if there's one thing I can say is that, and we haven't really talked about this in a video prior to now, is no matter what type of investor you are, I think it's a good idea if everyone has their foundation laid in index funds. Which, in case you don't know what an index fund is, basically it's a group fund basically of various companies all in one stock, like the S&P 500, for example, the Vanguard Fund (VOO), if you've heard of that one before. So basically, it's low risk and steady reward over the long term. It averages roughly around 10% a year. Of course, 2022 was one of the worst performing years over the last 100 years since the S&P has been a thing. I think I don't think it was the top 5 worst performing years, but it was definitely the top 10 or 15 or so. But so far in this 2 weeks that we've been into 23, it's actually been really good, or has a slow recovery, I would say. Whether or not that's going to stay, I don't know. We got a long ways to go still, and I think there's going to be a lot of major shakeups in the financial market over the next year, but we'll see how things develop. Um, but to me, so this is a fund that's intended for long term. This isn't buying and trading stocks on a daily basis like we saw with a lot of people over the last few years. Um, of course, Warren Buffett's a big advocate of the S&P 500. Uh, this is his baby, basically, and any other company that's in the S&P as well. Elon Musk, he's got a lot of stake in the game. So if this is one of the most important elements to these guys, it's it's going to be very hard for it to fail, because if the S&P fails, they fail, and we know how Warren Buffett is, and a lot of the guys that are like him, they're just plain not going to fail, or they're a very safe investment long term. So if you
One thing I
invest,
wanted to add to that as well, and it's a great way for you to explain what an index fund is. Now, when it comes to investing in these types of funds, Jason, would it be more so targeted around the United States? What are your thoughts around investing in index funds all around the world? Because I tend to hear, having not only US index funds, but also having index funds around the world as well, because you can't really time the markets in terms of, okay, let's say when US underperforms, will international markets sort of pick up at that time? It's sort of like a pendulum, right, if you will. What are your thoughts about having like a global investment strategy around index funds?
Well, that's one of the big benefits of an index fund is it's not intended to be you're trying to time the market. This is something that it's a long-term steady marination basically. Um, and it comes in all different shapes and sizes. There's index funds for specific sectors. There's tech index funds, there's energy, there's biotech even. Um, you name it, there's an industry for it. And there's also index funds that are specifically for international funds. Uh, of course, if you're a US investor, you're always going to be somewhat tied in the US, but I'm a big fan of diversification, especially in this day and age where there's a lot of uncertainty with the dollar. So if like I said, there are index funds where you can invest internationally. We could talk about that more in a separate video as well. I can't really give you specific numbers on that. Um, but to me, a lot of it just depends on your strategy. But oftentimes I see a lot of American investors that go overseas to invest. They actually go there and invest directly. Like Robert Kiyosaki always says, uh, I don't invest in the oil. I own the oil. Well, it's kind of along the same lines. They go overseas. Maybe they find a gold mine or something like that. There's been a lot of gold mining down in Colombia over the last few years, and a lot of companies going out there. So if you're getting into anything internationally outside the U.S., the best way to do is just go there personally, I think, and invest that way. Like I said, if you do an index fund that's tied in with international funds, you're always directly linked with the U.S. So
That's a great point.
a lot of people might find that risky. There's nothing wrong with it at all. To me, I mean, as much uncertainty there is with the U.S. these days, I'm invested heavily in the U.S. and I don't think it's going to be going anywhere anytime soon. Uh, whatever direction it heads in, I think in the end it's going to be okay. Um,
Yeah,
but
just to add to my perspective on the index fund strategy, I personally like the passive index funds. Why is that the case, right? As opposed to active index funds where you have like an active manager trying to find the best type of index funds that perform better. It really comes down to expense ratios, right? Because over time, you'll end up paying much more in terms of costs for how your index funds are being managed. And if you can find index funds with expense ratios of like 0.08 or 0.05, you're taking the right direction there. So I like how you pointed out VOO. What's the expense ratio for VOO? Like,
I know it's extremely low. It's less than 1%. I know that.
mhm.
But uh, building off of what you mentioned, so you're referring to like index funds and mutual funds. So basically, the big difference between those is mutual funds, in theory, have a higher return. Instead of maybe 10%, you might get 15 or even 20%
Mhm.
average. But of course, there's higher fees that go along with it because it's actively being managed. In a way, you have a professional investor that is trying to beat the market for you. While as an index fund, in theory, you have a lower return, but you also have lower fees to go along with it. So a lot of it just depends on your risk tolerance. Both have been uh, proven ways of investing over the years. You're really not going wrong with either one. To me, I recommend having one of both if it's possible. Um, that's what I personally do as well. And there's benefits to both, but if probably the safest possible one you can go with is just doing your own personal index fund. That's just personally, you're in complete control of it. You don't have any outside influences controlling it, and the fees are really low to go along with it.
Right. So it's interesting how there's all of these index funds out there. Now, just to share with the audience, how would one go about with investing in index funds, right? I mean, you have people barely starting out careers in their professional career, whether one is working for a company or if one owns a company. There are different implications for yearly investing. So let's say if you invest in a 401k, The IRS does set a limit of like 20,500 for pre-tax money. That's one avenue to take. Another alternative, or even an additional pathway, would be investing into a Roth IRA, where the limit is set for like 6,500 if you make less than like 140,000 annually per year. What are your thoughts about how you go about just with investing in different avenues that you can share in terms of how one could take advantage?
Well, you can invest in the index funds. Let's just stick with VEO because that's the most famous one and the one that's probably the safest one of them all. You can invest in that anywhere. Again, if there's anything that 2022 has proven, be careful what platform you invest your money on, like the FTX scandal, for example. And I'm sure there's a lot of regular financial markets out there that have been emerging over the last few years that who knows if something will come out of that. But I suspect, well, for me personally, and generally the safest bet is probably through E-Trade. You can easily just set up an E-Trade brokerage account right now, type in V, and you'll see that up, and you can just hit buy however many amount of shares you want. One share of VEO for one whole share is somewhere in the $400, 300, $400 range though. But of course, nowadays you can do fractional shares, and even a fractional share of that goes a long way. If you look at the entire history, like just take a, if you get on one of those investment calculator sites, just type in like if I made $100 investment today and then I did 10% average per year and I did that for 50 or 60 years even, most people would be very impressed with the return on that.
Yeah,
But
just to
E-Trade,
add to that as well, Jason, that has to do, what you're referring to is the compound of interest. One thing that people would have to be mindful about. I mean, there's financial calculations to that, but overall, it's just how you see your investment exponentially increasing over the first few years. You won't see that upward trajectory. However, over time, within decades, you'll see it catapult more efficiently and effectively. But to your point with VOO, that's definitely one great index fund to consider. I also would suggest looking at passive index funds in small caps, mid caps, large caps as well, right? So if you have a blend of that, that really helps minimize the risk as well. And we know with small caps, you tend to get a higher return on average, although of course you'll have the potential for it to drop further. And that's why having the blend of large caps as well, it helps balance out that investment strategy. And I think I tend to think of the analogy of like just being on the freeway. It's not about you trying to find the fastest lane, whether it'll be on the carpool, the left lane, or you want to slow down and go onto the right. I think of it as being on the middle lane, right? You have a car accident on the left lane or on the right lane, at least the middle lane is the lane that's consistent, right? Where you'll get that 10% return on investment. So that's really what an index fund is. It's to prime you towards the later phase in your life so that you have a solid foundation with, like you pointed out, with your retirement funds.
well, and to build off of that as well, all funds are fun to potentially get into. VEO, for example, this is your bed foundation. This is your safest possible bet to where if you can get this one under control and you have a great projection of it over the long term, then you can start venturing into other things. And even if those fail, you always got VEO or whatever your safest investment is to fall back upon. And when you have that security behind you, you feel a lot better. Like let's say if something did fail, okay, I'm sad that it failed, but at the same time, I got all this to fall back on behind me, and it changes your perspective of how you invest in the future.
Right. That's a great point. You definitely want to follow the old and boring investment strategy, having that as your framework, whether you apply the 80-20 rule, 80% in this type of strategy, and then 20% you can be creative and identify single stocks if you believe you're good at doing that. But if you just rely on the other alternative, then that would be very difficult to win in this market, right? So
And it, it
I just got the pop-up from Zoom here that it'll be ending very soon. So let's continue on with the next topic here. So there we've shared with you what an index fund is, why we should be considering investing in index funds, and how it can really add value in one's future. Right now, just quickly, just going over the different sectors in the stock market. What I'm seeing, Jason, is that in 2023, now that we've gone past 2022, where the overall markets, it's dropped by about a quarter in performance, right? I mean, S&P was at one point close to 5,000. It was hovering at 4,800, got down to 3,700. Now it's breaking around the 4,000, right? We're beginning to see confidence, if you will. We don't know whether it will continue that bullish pattern or will it continue to drop off. There's different perspectives. I mean, there's a stock analyst saying that it can continue to drop 20% further, right? So we really don't know. However, just based on the data that we're seeing, inflation, it's becoming more stabilized, and we're beginning to see more confidence for bullish investors. What sectors are you beginning to see have light at the end of the tunnel here?
so probably the sector I'm most paying attention to this year personally is the technology sector. If you've heard of that Chat GBT, that's really been making the news in recent weeks. It just came out last November. And if you don't know what that is, basically it's this innovative AI system where you can basically, like, let's say you wanted to write a speech or an essay, for example, you just type in a few keywords and it'll print out an entire essay or speech for you. Um, this, if the, if what is said about it is true, is going to be a very innovative thing. And I think all the big tech companies like Apple, Meta, Alphabet, for example, they're all going to want to get on board with this somehow, some way. So for that one alone, I think technology, whether or not they'll have a good year, I don't know, but I think that's a sector that's worth taking a look at for this particular year. There's going to be a lot of big news coming out with that. And of course, in the crypto space as well, that's tied into the tech sector as well. As bad as the FTX scandal has been, there's going to be a lot of revelations that come out about that, and it's going to help
Interesting.
and shape the crypto market going forward. And of course, we got some crypto exchanges that might be coming out this year too, like the SafeMoon exchange. I know we've talked about that on this channel before as well. That exchange is allegedly going to be coming out this year, so we'll see how that develops. But with that being said, I think technology is going to be the big one for this particular year.
That's interesting. Also, we've seen in the year 2022, I mean, oil did really well, right? And EV sort of just went on the back burner, right? What are your thoughts around electric vehicles, just solar, those type of plays?
If the EV market takes off, it's going to be a lot of years in the making. With oil, I personally believe oil will always be a good investment. As much as the politicians like to say, "Oh, we're going to get rid of oil," it's not going to happen. Even I think the CEO of ExxonMobil in the last 6 months or so came out and said, even if everybody stopped driving gas-powered vehicles today, and it was just all EVs going forward, they still expect a steady revenue growth every year for like the next 50 years at least. The world just can't operate without oil as much as the politicians like to say otherwise. So you can personally, to me, I don't think you can ever go wrong with investing in the oil at all. It's energy. You need it.
Great point. All right, so there we have it. We've discussed about just the overall stock market, what we're noticing, the how to develop an effective rational investment strategy through investing in passive index funds, right? With the return of 10% annual growth, considering that in compounding interest of what you have already invested, that's really the way to win in this market, right? It's not, getting rich quick within a day or a month or a year, but how you set that foundation for success in the future, right? Because it's not winning, quickly. It's winning that marathon race, towards that long-term trajectory. So I really appreciate you, Jason, sharing with all of us, what an index fund is, what your recommendation is, as well as talking about, just the overall outlook with the different sectors in the market. Now, just top three things quickly, if you can just highlight, what would be your top three things to just share with the audience that you can think of?
So first one I'll mention is be in the mindset of, we always heard about the rabbit and the turtle scenario. At the end of the day, the turtle ends up winning. It's really not about how you start and the journey along the way, it's how you finish. If nobody's going to care if you made it really big as an investor at 20 years old, but by the time you're 50, 60 years old, if you made it big then and you have more experience and knowledge in the world, you'll go along a lot better than most people. If they make it really big at 20 years old, they're burned out by the time they're 30. Uh, the key is to have that long-term longevity. So, and plus you got to graduate to the next step. I mean, it's let's say a net worth of 100,000 and then they go to like 10 billion within a couple months. They can't handle it. FTX, Sam Bankman-Friedman, for example, guy who made 26 billion within a couple years and now he's down to nothing. Of course, he was doing a lot of bad things along the way, but that's not that happens quite often to a lot of people. You got to have that long, steady, long-term growth. And of course, that's how index funds are factored in as well. You have that long, steady growth for the long term, and you graduate, getting the identity and the mindset of moving on to that next stage. You go from 100,000 to a million to 10 million, 100 million, and so on. And you're better prepared for it in the long run. So I personally think that's a big strategy to get into, having the mindset with your personal investment journey.
2 minutes left.
But that's about all I really wanted to say anyway on that.
Very good point there, Jason. So there you have it. Just wanted to say, I appreciate everyone who's watching this, right? Jason and I, we've been collaborating for years now. I mean, we've met during the COVID time frame, right? So it's been, I'd say, 3 years since, we've been communicating, and, we've met once in San Francisco, and, you coming out here to visit, and us going to Alcatraz and just touring around California, going up to Sacramento, and then just exploring. And, we hope to continue that journey, as we age through the years, build wisdom together, and just continue to just build on that friendship that we've had. So I appreciate you, Jason, and just with everything, not only the guidance you give me, but just that friendship that we've developed, and that we can share it with the audience here who can benefit. And of course, we're always learning from one another as well. So that's the good thing.
Yes, always.
All right, Jason. Well, I'm going to hit the stop recording here, and I hope that everyone enjoyed the video, right? If you did, you can support our channels here, right? So Jason, you want to, just see if anyone who'd be interested in your niche.
Yeah, so currently I just have one channel and it's just action figures, hobby related Star Wars action figures. If you're interested in that type of thing, I appreciate the subscribe. I'm up to 133 at the time of this video. I've gained about 100 in the last 6 months. I personally am happy with that. But
how does one find you?
According to my analytics, most people just find me by browsing mostly.
No, your name.
Yeah, it's just JMCGIN 1453.
There you have it, folks. So go ahead and follow Jason, and we'll continue to just build on what we have, that foundation, just like what we would consider with index funds. So all right, thank you all for joining. I appreciate your time.